Hey guys, it's Carter. By the end of this video, you guys are going to learn how to teach yourself to swing trade. So I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe. And if you guys want to learn more about swing trading, how to find stocks, the approach, the strategies, check out our school. We're offering 50% off to one person per day. One person per day. All you guys need is code SALE. Code SALE to get 50% off. So make sure you guys check it out. It's the Swing Trading Masterclass. It's an 8-week course. It's not a get rich quick. It's not alerts. It teaches you how to trade. So check it out down below. It's awesome. Private live streams, a group chat, quizzes, lectures, all that good stuff. So check it out. And guys, let's jump into this. So the first thing that I want to talk about when swing trading is time frame. If you're expecting to get rich quick or to turn $100 into $1,000 in 30 days, I'm sorry, but this is not the video for you. My strategy, my approach is very simple. It's base hits. It's consistency and base hits. I'm not a trader that's going to turn $1 into, $30,000 in a day. I'm not. There's traders out there that post stuff like that. I am not that type of person. I am a trader that will take $100 and try to turn it into $105. But I'm going to do this consistently over the course of a year. So maybe in a year we turn our $100 into $500 or $300. But what we do, and the great thing about trading, is the profits you make today can be used as leverage tomorrow. A lot of people start trading with these very, very unrealistic expectations that they're magically going to turn a $100 account into a $30,000 account and be a full-time trader. The reality of it is a lot of you watching this video that try to swing trade will not do exactly what I say. I'm not saying you got to do exactly T by T what I say to be a trader, but a lot of you are going to jump the gun and open up an account and start trading. And the reality of it is, if you go into trading with little education, little know-how, no strategy, no edge, no approach, you're going to lose money. 85% of traders actually lose money. So what separates that 15% is practice, education, journaling, and literally just continuing to learn. So let's talk about some of these things. So starting off, like I said, you got to have very realistic expectations. So I would highly recommend breaking up your learning into two phases. Phase one is going to be just literally learning everything about trading, everything you can, and kind of developing what type of trader you are, because there's a lot of different ways you can trade stocks. You can day trade, you can swing trade. Now, if you are a day trader, a lot of these similar, the similar timeline is important. As swing trading, it's a similar timeline for learning. But for me, I would recommend opening up a paper trading account for 6 months to a year. Doing this ensures that you're going to understand the platform you're using. You're going to understand how to find stocks. You're going to practice your strategy, your edge, but more importantly, what you're going to do is actually journal your trades. So you don't need like a fancy dandy journal like this that I use. Let me grab it here. This is what I use. I love it because it offers, a lot of great tools. But you could literally use a 99-cent journal from the dollar store. So during this 6 months to a year span, you're going to figure out what works for you and what doesn't. So you can implement that for future trades. You're literally going to learn as much as you can. You're going to take a lot of trades. You're going to lose a lot of fake money. But more importantly, you're going to figure out what type of trader you are. And you're going to literally join communities. You're going to check out our school because it's awesome. Code SALE 50% off. But anyways, more importantly though, you're really just going to go head in. If you go into trading and you're just, I'm not going to learn today. I'm not going to learn this week. I'm not going to paper trade. I'll just fund an account. You're going to lose money. I hate to say it. You may get lucky a couple of times, but over the course of a year or two, you'll burn through an account or two. So you need to focus on your simulated trades and practice. So after that 6 month to a year span, then you start small. Phase one is learning and figuring out the strategy. Phase two is emotions. Emotion plays a very, very key factor with trading. I think we all remember the time where GameStop and AMC, all these stocks went parabolic, right? They went from like $2 to like $150. Now, everybody and their grandmothers were buying this stock. And obviously a lot of people, millions of people lost money on this because they were buying not with a strategy, but with an emotion. And that emotion is fear of missing out. So you need to start small with $100, continue to use that same approach that you developed over that first 6 months, that phase one, and start small. Try to build up that account. Now, a lot of people think that if that just say you fund an account with $100 and you're making $2 a week, guess what? You are a profitable trader. And the only thing that's separating you from making more money isn't your strategy. It's just your account. So then after you do that for another 6 months to a year, then you can start going a little bit with the heavier positions. You'll have a little bit better know-how. And a lot of people think that, trading, anybody can trade. Yes, anybody can buy stocks and sell stocks. But what makes a successful trader successful is consistency. Man, consistency. I had a perfect little thing. But consistency, it's very, very important. So let's talk about a very simple strategy that you guys can use, and one that I've been using for years now, for years. So let's pull up my broker here. So the approach here is very simple. And this is Moomoo. This is the broker I use. They do offer paper trading. So I'll put them down below. You guys can get up to 20 free stock just by signing up. This broker is designed for traders. So I highly, highly recommend them. Check them out down below. But all right. So the approach here is very, very simple here. So what I do before I ever place a trade is I want to figure out this, my journal. I want to have some sort of trading checklist, and that's exactly what we have here. Let me pull up my journal. I have a digital journal. For all the course members, you guys know, you guys have access to this digital journal. But all right, this is our trading checklist right here. So you guys will see the first thing we look for is an upward trend, support, our undervalued RSI. We want to know the earnings. We never hold through an earnings report just because it's very risky to do so. The next thing, risk and reward, and then lower time frame support. So, all right, looking at DX, right? Let's go through the checklist. Stock on an upward trend, good. Stock sold off to some level of support, 90-day moving average line. You guys can see these lines here. We have the 90, which is the blue. The red is the 200, and then the green, which is the RSI. These are technical indicators traders use to help gauge where the stock can go, where entry exits are, all that good stuff, and trend indication. So you guys can see it hit that 90-day moving average line. All right, the next thing here, RSI. RSI is at a 35. The last time it was trading for a 35 was in here, where we saw the stock go from 11 to about 12. Previous to that was in here. So we understand that a 35 is an undervalued point for the stock, right? So that's good. The next thing here is earnings. So earnings report is very, very, very important here. And the earnings is actually coming up. It doesn't look like it's coming up soon. So I know we're in the clear here. All you got to do is type in the ticker and just go earnings date, and it will tell you. I wrote it down somewhere here. But earnings is October 20th, yes. So we are in the clear on that. The next thing here that we have is risk and reward. So hopping in on that 90-day moving average line, setting our stop loss, which is the max amount of money we are willing to risk on a trade, just below that, about 2% from the price. With a target up here, it offers a 5-to-1 risk and reward. So I would risk $1 to make over $5 a share, which is a very, very, very good risk and reward. So then you go to the hourly, and you guys can see the nice support we've seen from this stock here. So now the approach is very simple. You guys can actually see that it is forming some sort of, support like such. It broke out. Now it's forming some support. So now we just got to continue to hold, set our stop loss just below that. So if it dips down, we'll take our profit and move on to other opportunity. Using indicators like this is very, very, very important here. And that's the thing. That first phase is going to be learning the indicators and, all that stuff. So check out our school. You guys can use code SALE to get 50% off. I'll see you guys in there. Hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.